Hey all, welcome to Share Trek. This is Raj here. Friends, I thought before I forget what I look like, I should do a video. And I looked at myself on the camera, look at my stubble and all that. I'm thinking, oh God, I just let myself go. I've been busy trying to lose weight and very successful at that. I've been walking a lot. I started off, I think a couple of months ago, walking 4 hours a day, 2 hours in the morning, 1 hour in the gym and 1 hour in the evening. And then I started workouts as well. So I put on a little bit of muscle mass, all preparation for a happy retirement. Fingers crossed. I turned 60 this May, and this is one of my most important tasks to do this year. So I'm very happy to report that I've lost around 8 to 9 kilos, very close to my ideal weight. And I've started seeing a little bit of definition on my abs, and I'm feeling great. So that's what I have been up to. And in the process, I just forgot personal grooming. I'll fix that in the next video. But right now, the reason I wanted to talk to you is because of a few things. One, I want to talk about Tesla, the show yesterday. I want to talk about something that happened with BlueBird Bio. It's not a good news. I want to talk about that because many of you are keen about what's happening with BlueBird, whether it's going to recover or not. So this will be very important news for you guys if you have not yet already seen it. It's breaking news kind of thing. The third thing I want to talk about is geopolitical risk. It's looking insane to me that the markets are just soaring higher and higher, and two things go against it. Historically, whenever the Fed has started rate cuts, stocks have fallen. And the reason they fall is because Fed cuts rate when the economy is bad. And when the economy is bad, it results in people starting to think that in future the sales will be lower, the margins will be lower, and unemployment will increase. That's the thought process that happens, and therefore forward pricing of PE makes all the stocks go down. This time it has not happened so far. October is a bad month historically. So far, we have not seen too much of a bad thing out here. Is it going to happen this week or next week? We don't know. Look at the geopolitics, right? We have the Middle East conflict going on full swing. We have the Russia-Ukraine conflict going on full swing. And of course, we keep on forgetting about TSMC in Taiwan, because that's going to be the choke point for the entire semiconductor industry if anything was to go wrong out there. So the diversification has got to happen. All these things are happening in parallel, in real time. And on top of that, we have a situation where in the US, the election rhetoric is becoming very ugly, and there is instability right now. All that will get resolved when the results are declared after the election on the 4th of November. And we can breathe a sigh of relief after the 6th of January, once the peaceful transition of power takes place, assuming the right party wins. And different people have different opinions about the right party. So let's not get into that politics at this point of time. But whatever happens as a result of the election in US is going to impact everything worldwide, because if one party wins, there is going to be heavy tariffs. And when the tariff barrier comes in, there will be retaliatory tariffs from other countries as well, and trade barriers will start rising, as a result of which multinational companies particularly will start feeling their business squeezed, and local companies which are manufacturing, small cap manufacturing companies and all, will find improvement in markets for them, and overall the customer is going to pay the tax, which is the tariff. Therefore, it's going to be very expensive for the customers, and that's not going to increase the margins for most of the companies, except the ones which benefit from manufacturing locally in US and selling locally in US without any global footprint. So look at companies like Microsoft, Google, Oracle, Dell, and NVIDIA. Those kind of companies which have got a global footprint, they are selling globally. They are going to face a lot of pressures. Apple is also one of the companies that comes to mind, Meta. All of these guys will face a lot of pressure if the trade wars get started. So this is my synopsis of the global geopolitical issues that are staring us in the face, but the market is not taking cognizance of those things. When will it start doing that? No idea. doesn't seem to do, at least now. And a few analysts are talking about the year ending being bad, but I think that Santa Claus rally is definitely going to come in because there's a spurt of sales during Christmas, and that generally lifts the spirits and the expectations. So that's a big marketing event coming up. So that should boost the markets, I'm thinking. Now, coming back to the Tesla event, I think the Tesla event was underwhelming. I personally did not watch it live. I saw it later on in a recorded form. And I also feel that most of the things that we saw out there were quite gimmicky. And you may say, Raj, you are an anti-Tesla, anti-Musk guy. I have reasons to be. I've lost a lot of money on Tesla, and I have sold all my holdings of Tesla. I have nothing of Tesla. I'm not shorting Tesla either. I'm not in the shorting business at all. So I have no stake in Tesla at this point of time. I've written it off. Now, I am thinking that the Robo-taxi, let us start with Robo-taxi. I'm thinking that the Robo-taxi as such is underwhelming because it's just a two-seater. Now, does this mean that anyone who hails a Robo-taxi will have to hail two taxis because there are four of them? And Waymo is offering four-seaters. It's already operating in 3 or 4 states, and I think they're already operational, and they have signed up with Hyundai to give more electric cars, which can then be used for autonomous driving. So there's a lot of collaborations happening out there. Waymo is already operational, and it seems that Waymo has already had a loss of around a couple of $1 billion, or maybe at least $1 billion, because the part of earnings that Google disclosed, that part which includes Waymo, suffered a loss of around $2 billion last year, and out of that, there's an estimate that maybe $1 billion or more is lost due to Waymo. And we should remember the fact that it's a startup at this point of time. But the admirable fact is that they have got 4 seats, and they are already operational. They're available in 3 states, at least 3 to 4 states. Whereas Tesla's Robo-taxi is going to be available in production in 2027. If I'm not mistaken, that's when somebody can buy it. And it's at a price tag of $30,000. So I'm thinking that it doesn't have any steering wheel or anything. So probably it has to be directed by a server somewhere to take people to that destination. The question is, if I bought a Robo-taxi and I sent it out to pick up passengers, and occasionally I want to use it for my own purpose because it doesn't have a steering wheel, and do I have to go through the same billing process and pay to use my own taxi? And does Tesla get a cut in that commissions? Those are all the information that I'm looking forward to see, so that one can estimate how good a proposition this is, given that it's only a 2-seater. Now, if the 2-seater has to compete with a 4-seater Waymo, I think right up front, I would say that if I'm a party of 4, I would rather order a Waymo than order 2 Teslas, unless Tesla has a price which is half that of Waymo. And that too, if I'm going to a party or I'm going to the pub or something, I would prefer all 4 of us are together, having a banter and having a good time, enjoying the experience while reaching the destination, instead of being in 2 separate cars. And I think that makes sense to me. So I don't know why they made it a 2-seater car. So that is first part of my critique. There are 2 components to that which I already discussed. The next thing is that we don't know if it was using full self-driving, FSD, or it was using some other method to propel itself from one place to another and avoid obstacles, because everything was carefully planned. I did not see anybody coming across the path of that Robo-taxi and the Robo-taxi stopping to let them go. No such thing. At least I didn't see them. Maybe it happened, I didn't see them. So I'm thinking, how much can we rely on this? And next, I would like to talk about the approvals, right? All these cars have to be roadworthy in order to be approved. So they still have a lot of challenges to go through the approval process so that these taxis can be deployed on the road. And they have to convince the authorities that the FSD is foolproof. And at that point of time, they'll have to show all those use cases where somebody is in front or a dog is in front of the car, or there is a gaping hole on the road and the car stops. So all those scenarios have to be demonstrated to prove to the authorities that the car has got the AI in it or the intelligence in the FSD to take human passengers safely from point A to point B without causing any risk to them or to anybody else in the path. So that's a long hurdle to cross. And 2027, I think, is an aspirational target. I don't think this is going to come until maybe 2030. I have a personal experience also. Out here in Canada, I was one of the first people to pay $1,000. At the time, I was an Elon fan. I paid $1,000 deposit to book a $25,000 Tesla car, which was supposed to arrive in 2 or 3 years. And I waited for 4 years, and then they started releasing cars with the higher spec, which costed almost $45,000 in Canada. And by that time, the government had already taken away their subsidy, because we got a conservative government which took away all the subsidies for electric cars. And I thought that, it was a switch bait or clickbait or whatever you may say. They showed me something and they delivered something else, and they wanted me to upgrade. I didn't think it was worthwhile, especially without government subsidies. So I took my refund, but my money was with them without tax. I'm thinking something similar could happen with this Robo-taxi. A lot of people are going to probably end up paying a deposit, and they are going to wait for 2027 for it to be delivered. And I would suggest to those people, first of all, check the agreement and see if there is a guaranteed delivery in 2027. Second, ask about how revenue sharing will take place and whether you can use the car for yourself from time to time without having to pay Tesla anything. And also ask if you have to pay any charges to be part of the network in order to be able to deploy the Robo-taxi. So those are all the things that I am not clear about. Maybe any of you know about it, put it in the comment section, because those are all very important considerations for the valuation of a Robo-taxi. And to do a business case and see what the fund flow is going to look like and whether it's a viable proposition to have a fleet of Robo-taxi, or for that matter, even buy a Robo-taxi just for your use, and when you're not using it, for it to be deployed to carry passengers and earn you some money on the side. So that's what I wanted to talk about Tesla. And then we'll look at the price chart. It has fallen drastically. And a lot of pricing looks at Robo-taxi and FSD and gives Tesla a premium. And elsewhere, Uber has picked up, and Uber is also collaborating with Waymo, if I'm not mistaken. So I think Waymo is ahead, and Google is a stealth player in AI. They have delivered great AI use cases. I personally had a lot of fun using Notebook LM, where I get all my research articles together, study them, and then I create my own abstract of notes with all the points that I want to discuss, and I give it to Notebook LM, and it creates dialogue, which I launch here in the channel as Quick Bites. And there is another AI, it doesn't belong to Google, but it can read my script. So I have played around with that as well. That's also doing a great job, delivers very well. And both of these save a lot of time in production of a video. So I'm thinking that I get more and more convinced that AI is here to stay, and more use cases are proving that companies are going to go to NVIDIA for more chips, and they're going to go to the hyperscalers for more cloud capacity and services. And there'll be a lot of consultants like from Accenture helping clients to deploy AI and create use cases for their own industries. So that brings me from Tesla into semiconductors and AI. And I think NVIDIA has got a great prospect ahead of it. So I've covered that area. And I was going to talk to you about S&P 500 also. This is from a website called Street Smarts. I find it very interesting out here. You'll see that we have a chart out here which says S&P 500 index has been in a bull market for 85% of the time when you look at it from a time sequencing perspective. And the average bull market has returned 259%, while the average bear market saw declines of 39%. So even if you were to stay invested and just put your money in some really good blue chips with good business case and leave them there without having to worry about on a daily basis, at the end of 10 or 15 years, you're going to be laughing because you would have significant gains over a period of time. So that's what I would say from this chart. And another thing that I noticed from this chart is that the last two bull markets have been very mini and they have been dropping. So we really haven't had a true bull market after the end of 2020, where we had a gain of 401. So we look forward to that, and it's likely to happen because, as I feel, AI, robotics, and genomics are going to be the new industrial revolution, and they are all going to happen in quick succession with each other. And that should be enough to push us to something superlative like plus 582% in the next 5 or 6 years. That's what I'm hoping for. And then we look at the S&P 500 bull market's historical return. The case being made here is that the current bull market has not even scratched the surface of what it is likely to return, because the average of last 6 bull markets was 259%, and we are just now at 61%. But to that, what I would say is that we have been through a series of problematic situations from 2020 onwards. We have COVID, and then the resultant supply chain issues that came along, and then the inflation which suppressed the market, and we are now kind of recovering. But during our recovery, we have all those geopolitical problems that I spoke about: Middle East, Russia, Ukraine war. It just takes a little bit of Houthis firing missiles onto supply ships and all, and then what can happen is you have a supply chain blockade, and that can create a supply side inflation because not enough supply is available for normal demand. And also you could have rising gas or oil prices because winter is coming, and Russia and Europe are not in talking terms, so energy prices could spike in Europe. So all these things are still lurking in the background. They may or may not come up, but right now we have 61%. Are we going to do another 41% before the end of the year? I really don't know. Honestly, I don't have an answer for that. It seems like a tantalizing position to be in, with another 40% gain, assuming that we are going to do as well as we did in 02 to 07. Now, the average duration of the last 6 bull market was 2,510 days. And right now we have only 727 days in logging so far. So there's plenty of days of bull market left if we were to go by some historical aspects. These are all very interesting ways to look at our current situation and get a feel of where we are. And we are looking at S&P 500 valuation, 12-month forward PE multiple. There we are almost at 21.7x, and we have seldom been above it before. So I think from this perspective, I would say that we are almost overdue for a turn back down to try and go up again. Unless we see the use cases from AI going mainstream and starting to deliver productivity gains, resulting in improvement in bottom line for various industries, I don't think we are going to be able to get higher share prices with 21.7x multiples, because we want to see earnings go up, and with same 21.7x with higher earnings, we'll see much better share prices. That said, I want to take a look at QQQ. We have been struggling to fill up this remaining part of the gap. We almost came there, but we are running short. And this morning we were slightly negative, and right now we are slightly positive. It's around 2 o'clock in the afternoon on the 11th of October. We have option expiries also happening for this Friday. And I'm seeing that the momentum is still flat. MACD is bullish. But how long is it going to take us to break through above 495.96, which I think is very essential for us to scale new heights? But we have been struggling for the last 3 days. In fact, if I say we have been struggling since 26th of September to break through the level that we are in right now, 493.35. So I don't know. There is a little bit of lethargy in the market at this point of time. And if you were to go and have a look at what happened to Tesla today, because that was another topic we spoke, Tesla had a huge gap down, and Tesla lost around 8.32% as of now. And earlier in the day, it had gone all the way to 214.77, which is a significant drop, and it was saved by the 200-day exponential, 150-day exponential moving average, which is this white line out here. It's the 150-day exponential moving average. And you can see both momentum and MACD had gone down. As I mentioned yesterday, and also to somebody in the comment section, Tesla chart looked weak. Even yesterday, if you saw my morning pre-market report, I had mentioned that MACD is looking weak and momentum is looking weak for Tesla. It has definitely taken a dive down at this point of time. And we have the earnings coming up on 23rd of October. We'll have to see if their earnings number meet expectations, or else it could go down further. Now, that said, we are looking at... Next, I want to talk to you about BlueBird Bio. BlueBird Bio has not looked bad today. It has gained 0.85%, but friends, there has been news in the background. And 7 out of 67 children treated with BlueBird Bio's gene therapy for a severe nuclear disorder in clinical trials have developed blood cancer. So this marks an increase of 4 cases since June 2022. So 4 plus 3, 7. And with the emergence of these 3 cancer cases, it led the FDA to convene an advisory panel before approving the therapy now marketed as Skysona. So researchers anticipate more cases of cancer could arise in the coming years and are conducting regular blood tests to monitor the patients. So this kind of puts a little bit of a damper into the sales for Skysona, which is a therapy for CALD. And we have some news about Lyfgenia as well. We have a black box warning, which we already know has been included for Lyfgenia. And on top of this, this is a good part of what BlueBird Bio did. It laid off 30% of its workforce. When BlueBird lays off its workforce, it's basically extending its cash runway without diluting equity. But overall, given that its pipeline is not seeing introduction of any new candidate, and it's not seeing introduction of any new candidate because BlueBird literally doesn't have money to start anything, that makes me feel that the company is limping, and it needs new funding. And when the new funding happens, I think BlueBird Bio will experience more equity dilution. And at this point of time, it's almost a penny stock. Someone asked me whether BlueBird Bio stock can go down further. My answer to that is yes, it can go down further. There is no limit to how low it can go. There can always be reverse splits, and the stock price can come up again because of the reverse split, and then it can go down. I think for BlueBird Bio, they must have to explore some strategic options in order to get the best value for the 3 approved therapies that are already monetized and in the market. But unfortunately for BlueBird Bio, these therapies have got some baggage with them, like the black label warning from the FDA and the incidence of cancer in some patients for Skysona. So that's the way I'm looking at it. And also they have competition from CRISPR Therapeutics and Vertex for sickle cell disease and beta thalassemia therapy. And on top of it, BlueBird is focused just on US, whereas CRISPR and Vertex are looking worldwide for the sickle cell therapy. So they will have much more strength and economies of scale to compete in the US. That's the way I think I would look at it. And yeah, so I'm not feeling very optimistic about BlueBird Bio right now. We'll wait and see if they can manage to get more funding without diluting equity. That can probably help improve the sentiments and boost up the share price. So my friends, this is what I had in mind that I wanted to talk to you guys about. And it's been a long time since I made a video, so I thought I'll do it today. I hope you enjoyed understanding what I was talking about, my thoughts, and I would look forward to your feedback. Please put it in the comment section and let me know your thoughts about Tesla, your thoughts about BlueBird Bio, your thoughts about our geopolitical situation and what's likely to happen with QQQ. And also those of you who are Americans, give me your feedback on what you think is happening in the US and how the elections are going to shape up. Are we going to have a tariff regime government, or are we going to have a government that is not going to push too much tariffs? I'd like to hear your feedback. And yeah, that brings me to an end of this video. Thanks and have a great day, and bye for now.